What's good, YouTube? This is your boy Leroy Lubisi, and in this video I will be just breaking down how to analyze the Euro USD pair. Now, just to give you a little bit of context, I am the lead analyst and the director at Main Markets, and yeah, man, we're here today. Just mind you, this video will just be a little bit rusty because at this moment we're basically just trying to wing this whole YouTube thing, and we're just looking to give people free analysis on how to capitalize and trade the markets. So I'm just going to be giving you a rundown of my trading plan, and from this we will basically use this as a guide and how to map structure. You will see that I've already marked out some drawings onto my chart just to speed up the production of this video. So the first thing that I'll be looking to do is mapping of market structure. When mapping market structure, I basically analyze price from the weekly all the way down to the M15 chart. So I'll map the weekly chart, the daily, the 4-hour, and finally the M15, and I'll basically just look for way to put my targets and look to way to enter the market from this mapping process. So starting on the weekly and daily, we're going to map those two just to get the higher time frame perspective and essentially try to establish some possible targets for the long term, because as SMC traders, we essentially try to look at the higher time frames and then try to catch some longer term moves with high risk to reward, and that can just help us to compound our trading accounts significantly. So step one is to map the swing ranges of the weekly chart, and I will do this by seeing where price is broken structure, and we see that price is broken structure here. Now, because price has broken bearish structure, we expect for the market to continue to make a bearish move. Let me just put that in better context. Because price has broken bearish structure, we expect prices to continue to move to the downside to continue the overall bearish trend. If you can look, you will see that price is in an overall bearish trend from a weekly perspective. So after we established a break of structure, we need to mark up the swing range within that structure, and that is this point here and this point here. And you will see that I've marked out a strong high and a weak low. Now, the reason why this high is labeled as a strong high is because for the trend to remain bearish, it cannot cross this point over here. So if price goes on to break this point, then we have essentially started a new bullish trend to the upside. However, at this point, I'm looking for price to pull back, come down to break structure to the downside, pull back again, and continue to break structure to the downside, and so on and so forth until essentially a strong high is broken to suggest that price is switching trend to the upside. Right? So we have the bearish break of structure, and then we have this swing range to work with from a weekly perspective. Now, the expectation is that price should pull back and then essentially come back down and cause the pro trend run. Hope that makes sense. So at this point, we move on to step 2 to mark out premium and discount. Premium and discount just essentially tells us if prices are high or low. So in a bearish trend, if prices cross this point to the upside, it essentially tells us that sells are higher probability at this point, and we would look to trade according to that. So if we just move this little tool over here, it's essentially just a fib tool for those of you who trade Fibonacci's, and we'll just basically just mark out the 50%, and look to trade accordingly once price has breached the 50% zone, which is over here. So we see that price has already crossed into the premium side of the premium and discount tool, and yeah, the pro trend cells are high probability at this point that we are going to run this low. Step 3 would be to map relevant supply and demand zones, and the supply zones that we see here, because we are in a bearish market, would be this candle over here and this one over here, and we just draw rectangles across just to be able to see if price has entered into these zones. What I'm looking to see is for price to pull back into the zones and then grab some orders over here and then move on to break structure to the downside, or if price is looking to make a deeper pullback to move to the origin of this extreme and then grab some orders over here and then go on to make the move that will cause that bearish break of structure to the downside. So essentially, what do we gather from this? We have a strong high, a weak low, meaning that this low is likely to get run. So whatever, if we are looking to sell this market, we are going to mark this low as our take profit, right? And now you will understand the significance of this once I actually go into the lower time frames. Now moving on to the daily, we essentially want to do the same thing. We essentially just want to mark out the swing range, the premium and discount, and the supply and demand zones of the daily structure. So we see that price has broken this low here, meaning that the daily is also bearish, aligned with the weekly bearish structure, and the lowest point that the highest point that caused this break of structure is this point over here, and I'm looking for this range to be protected within here and here. Now we've mapped the swing range, so we need to also map the premium and discount of the daily range, and we can see that from this that price has already crossed the 50% point of the premium and discount of the daily range, in which we're looking for which means that sells are much higher probability at this point, right? Because we're in a seller's market and prices are premium, prices are high. So at any moment from here, sells are likely to sellers are likely to come in and induce the move that will cause the break of structure to the weekly point. Remember that we're looking to target the weekly low, right? So yeah, once we've mapped premium and discount, we look to map relevant supply and demand zones. Now since we're in a bearish market, we're going to look for zones that caused we're going to look for supply zones that caused a break of structure, and we see that we have a break of structure here, and the last candle that came in to cause that break of structure is this candle, bullish candle over here, and we've marked a rectangle across so that when price comes into this zone, it'll basically pick up some orders that were left behind by institutions, and from there we're gonna look to trade along with them and try and catch the move that will cause that weekly break of structure. So once we've mapped that out, we're essentially gonna go just to the 4-hour chart and try to see what the current price action is doing. Remember that the daily structure was broken here, and the move that caused the daily break of structure were essentially trading within this range over here, right? And the weekly structure is marked out in this red color over here, just so that we know where we are within price action, right? So just to give you a bit of better context, we're trading within this daily range, so we're expecting this high over here to be protected, and we the 4-hour chart will basically just keep on making higher highs and higher lows to essentially to this daily zone over here, and until it picks up enough orders to start switching trend. And once it switches trends, we know that it will be aligned with the daily and the weekly time frame, that it's going to facilitate the move to cause the next break of structure. So I mean, you can see from all of this that we are trying to build a story of price action, and we're trying to build confluences just to how can I put it, give us confidence that we are trading along with the overall bearish trend, right? We are within the weekly range over here. We are within the daily range over here. Now we need to basically map the 4-hour structure as well. We can see that price has recently broken structure to the downside over here, and now we're playing within this 4-hour range over here, right? This is the 4-hour range, within the daily range, within the weekly range, and the 4-hour is bearish, the daily is bearish, the weekly is bearish. So we can see that we have 3 time frames aligned so far. Previously, the 4-hour was bullish. It had to be bullish so that it can just essentially facilitate the daily pullback. Now once it switches bearish, we have some sort of, how can I put it, clarity or like some kind of confluence that the daily pullback is finished, and that the daily is looking to start the next pro trend run to the downside, right? So recently the 4-hour has switched bearish again, and if you look here, just to zoom in, it switched bearish, it came back down to pull back. Remember, we're playing within this zone over here. The 4-hour has pulled back, and then now within the 4-hour range, we have this minor break of structure here, right, which is called a change of character of some sort, right? We call this a change of character because at this point, right, we have the 4-hour structure and we have the internal structure within the range. Now when you see the internal structure switch trends to the downside, it is likely telling us that the time frame below has likely switched bearish along with the 4-hour like overall bias. So if we come in here, if we come in to this area over here, this will most likely be an M15 trend change. Now if we go onto the M15, we'll see that yes, the M15 has also switched bearish to basically confirm that the 4-hour pullback has finished, right? Now this is good news for us because we have basically monitored price action within 4 time frames now, and the M15 is bearish, the 4-hour is bearish, the daily is bearish, the weekly is bearish, which means that we can with confidence now wait for, I'm just going to mark the M15 structure. This is the M15 structure. We can essentially wait for the M15 to pull back within any one of these zones over here, and we can then start to look to enter the market anywhere around here, and we can with confidence target this weekly low, because market structure suggests that this low is going to get run, right? So yeah, I mean, even if you're trading indicators at this point, let's say maybe you're trading some kind of moving average crossover strategy, what you would be seeing right now is that price, or let me say your moving averages would have crossed to the downside, and because we're expecting the M15 pullback before the ultimate move comes in, you'll see your moving average switch bullish and then switch bearish, and then you can enter here and come in and target that weak structure that we were looking at earlier over here. And just get rid of all these drawings quickly. So what's going to happen now? We've marked out some supply and demand zones that we are looking to enter from. We're looking for price to come in any one of these orange zones, and let's say maybe we'll put in a sell limit around here, right? When most traders are only looking to trade a 1, 2, 3, because we've done all the work of actually mapping out the higher time frame structure, we can essentially just come in and actually have our take profit target at the weekly low over here. Now that's a risk to reward of 1 to 32, which is more than 10 times what your average retail trader would be looking to trade if they entered on the M15. Right. If you remember earlier in the video, I did mention that we also look to enter on the M1. So as the M15 is pulling back like that, when price comes into this M15 zone over here that we are looking to grab the bearish move from, we can essentially wait for price to come in and change character or switch bearish on the lower time frames, and when price pulls back on that lower time frame, which is the M1, would basically look to come in with an even smaller stop loss, or a scaling, if I can put it like that, with a second position which has a much lower stop loss of about 4 pips. Alright, 4 pips, and now we're looking at a risk to reward ratio of 1 to 122, right, which is a ton of reward once you've actually mapped market structure like this, and you've actually just done all the work and just zoned into price action little by little. If you don't understand smart money concepts trading, I get that this is or can be confusing. So if you are the type of trader who trades indicators, you can at this point, let's say maybe you trade I'm just trying to get rid of this. Let's say you, for instance, trade an RSI, right? You can essentially wait for price to pull back on the M15. You can have your trend line drawn like that, and then maybe just wait for a trend line break, and then wait for price to retest your trend line, and you would have your, let's say, your RSI or easy moving like that, you know. Let's say your RSI comes into just switch color to make alright, let's say your RSI comes into this would be on 90 and your 10 or 80-20 depending on your settings. Let's say you see that your trend line has broken on the M15 and your RSI has moved into what is this? Is this oversold? Yeah, oversold, overbought, whatever. But essentially when this has crossed here and this is aligning with your trend line break and retest, you'd essentially just have your order somewhere over here with your stop loss, and with this analysis you can with confidence target that weak structure that we were looking at and capitalize on a high risk to reward trade over there. See? easy peasy. So yeah, this is essentially how we're looking to capitalize on the Euro USD. Mind you that as you are entering this trade over here, that it is going to take quite a while for this price action to play out, for it to actually go out and hit your take profit. So do not get scared at some point and try to exit the market earlier. Let your edge play out, let your risk to reward ratio just give you the rewards that you're looking to gain after you've done all this work and have actually just mapped out market structure like this. And you have, just let everything play out, because you might enter, say, here, and price might start making lower lows and lower highs, and you can see the bearish trend forming, but price is price. It might switch bullish, switch bearish again, switch bullish, maybe even come back close to your entry. But the expectation order flow is that we are looking for price to essentially run this low over here, and yeah, let's just let it play out, and I'll see you tomorrow in tomorrow's analysis to see how we could look to probably just enter this market. Yeah, that's it from me. Cheers and goodbye.